So, hello guys, I'll be talking about understanding support and resistance. That's what we'll have here today. So, it is good as a trader that you understand the concept of support and resistance. So, I'll just hit the nail at the head. Let me go straight to the point. What is support and resistance? So, before I dive into what support and resistance is, I'll need you to just understand the concept of support and resistance. Now, if you're in a building and you want to jump out of a building, you cannot go through the roof because the roof will resist you. I mean, if there's a ceiling in a room and you want to jump out of a room and that ceiling is there, the ceiling will resist you from jumping off or jumping out of the room. So the ceiling or the roof is the resistance. Then if you are in a room and let me say you want to go down the mall, you cannot go down the mall because the floor will prevent you from going down the mall. Do you understand? So that floor now is the support. So with this, I think you've had an idea of what support and resistance is already. So that is what I stated here. The resistance is acting like the ceiling, the support is acting like the floor. So now bringing this into our concept of trading or charts or doing technical analysis when it comes to charts, resistance acts as a ceiling for prices is a point whereby if prices gets to that point, it can't go further. So there's a change in direction, and same goes for the support. When prices are coming down, when they get to the support, price can't go down further. So there tends to be a change of direction of the prices of the asset from that point. So what is resistance? So resistance is a point whereby selling pressure is higher than buying pressure. So price tends to there tends to be a change of direction from that point. How about support? Support is a point where buying pressure is higher than selling pressure. So there's a change of direction from prices going down and price start going up. So with before we go further, you need to understand how prices move. So when the prices of an asset is moving, it goes in an uptrend direction, which is what is stated here, an uptrend direction or a downtrend direction, or we can talk about a choppy or a ranging market. So you can see the price was going up here in this direction, which is an uptrend. The price was going down here, which is a downtrend. Then it got to this point, the prices of the asset was ranging, as you can see. It was ranging between support and resistance. So this is a ranging market, and or you can call it choppy market. It is stated here, a ranging or a choppy trend. Do you understand? So if you understand these three things that I just said, then you can start talking about understanding your support and resistance. So when prices make an impulsive move, like I started from here. Now let's say this is when this asset was launched. So when it started this impulsive move, you see, it started this impulsive move and formed a higher high. Now, this higher high will result in the formation of a resistance. It now came down, there was a retracement and formed a higher low. So this higher low will act as a support. That is why on this chart I'm putting resistance R, which is for resistance, S, which is for support. Do you understand? So impulsive move will form a higher high, retracement will form a higher low. Impulsive move will form another higher high, which will form another resistance. Retracement will form a support. So you see, as you can see that our price is going in an uptrend direction, and it got to this point. Then we saw a fall. Do you understand? We saw a fall. Now, it the price fell to this previous support. Do you understand? And made an impulsive move, and that impulsive move will form a higher low, lower high, and they had to move down again to form a lower low, lower high, lower low, lower high, lower low. As you can see, as it's forming all, we are seeing our support and our resistance being formed. So now I'm just trying to explain this thing in the simplest best form so that we all can understand this. So now looking at this chart, now it was possible for now understanding support and resistance will also know when you enter your trade and exit your trade. Okay, look at this instance. Okay, there's a resistance formed at this point. Our prices, when prices was falling to this point, it would have taken a change in direction from here, but we saw a breakdown from this resistance point to this support level. Do you understand? So the price went and gained momentum in this previous support before it made an impulsive move. And when it got to this point, this resistance, instead of breaking it and going up, the resistance acted as a ceiling. So the prices couldn't push further, and we saw prices falling down to this previous support. It will also be possible for financial institutions to also push the price above when the price was falling, because this resistance would have acted as support, but we still saw a breakdown to the previous support. Do you understand? So the prices went up. So two things I need you to understand is the concept of breakdown. Let me break down, and breakout. So this happens for downtrend, this happens for uptrend. I mean, in breakdown, when a support is broken, when a resistance is broken, when prices are coming down, like in this instance, the price was falling, we're expecting it to take to bounce off from this point, but we saw that there was a breakdown of this support and the prices had to go down to this point before forming a new support. Same is applicable to this one. Same is applicable here. We're expecting the price to hold above this level, but financial institution might decide to push the price down, so a breakdown will happen at this point, and we see prices breaking the previous support to form a new support. And same goes for this one now, breakout. This one happens for resistances. Okay, let's take it that the price buying pressure was, or these are demand zone, buying pressure was high here. So instead of the price breaking down, the price will push up. So on pushing up, on getting to this point, this place is now a resistance. So if the price is pushes up above this point, that is a breakout. So the price have broken out. Do you understand? And if you look at this, understanding trade or using your support and resistance to do analysis, you need to understand chart patterns. Now with this, this pattern I am seeing here, this down to here, this is what I just traced out from here to here, like this, like this, like this, like this. This is a head and shoulder pattern, because this is your head. That's why I indicated an H here. This is your shoulder, which is the S here. This is another shoulder, which is the S here. If you see this in an uptrend, the prices will definitely fall down. That is why at this point I had to draw my trend line from this support to this support. So I will be expecting the price to bounce off from here, but financial institution will look at this chart pattern and say, oh, this is a head and shoulder trying to form. So in this scenario, they'll push the price down. So when you understand chart pattern or market structure, you know how to understand your support and resistance and your trend lines better. Okay, but in a case where the price doesn't go down and the price bounces off here, it means this chart pattern head and shoulder has been invalidated and another new chart pattern has been formed, which is this one and this W, which is double bottom. You understand? So with this now, that's why I indicated here, price will bounce off from this support and this one, because this support has been tested severally. Do you understand? So understanding chart pattern is very, very necessary in understanding your support and resistance. And another tip I want to drop for you is, the more a support is tested, the weaker it becomes. Do you understand? The more a support is tested, the weaker it becomes. Same goes for resistance. The more a resistance is tested, the weaker it becomes. In the sense that, okay, let us look at this ranging market. Okay, we saw that this support, the price went to this place and formed a new support, formed a new resistance, came back to the support, went back to the resistance, came back to the support, went back to the resistance, came back to the support. So we can see that both the resistance and the support are tested often. And we said that the more the resistance is tested, the weaker it becomes, and same goes to the support. So I can see that at this point, there might be a breakdown to, for the prices to come back to this support here. That is why I made this dotted line. Financial institution might want to push the price further down so that they'll go in a lower price and make more profit. So they might push the price further down to this previous support here. Do you understand? Because the support has been tested several times. I would say the more the support is tested, the weaker it becomes. And same goes for the resistance. You can see the price can actually break out from this point here. Price can actually break out from this point. And if there's a breakout, the price will go up. But as a conservative trader, it is pretty sure that this resistance here will act. Do you understand? This resistance will resist the price from breaking further up. So there will be a slight retracement to this support. Do you understand? This support and this resistance before it will push up. If you understand something, now these were resistances before. Now the resistance is acting as a support at this point. This is a support. You get? This support acted as resistance here, and this resistance is acted as support here. That is called the support resistance flip. Now that is why I indicated it here. This resistance acted as support at this point because there was a breakout above resistance level. When there's a breakout above a resistance level and price falls back to that resistance and price begins to go up, the resistance has now acted as a support. So it is called resistance flip. In the case of a support, in this level, okay, let's say there was a breakdown beyond this support level and price goes down and gets momentum in this support and then goes up and hits this support level and goes down. You can see now this support level is now acting as a resistance because the price went down a bit. There was a slight retracement before the price had to break above that resistance, which was actually a support before. Do you understand? Which is a support flip. I stated here, this is a support flip, this is a resistance flip. Do you understand? So these are the things you need to understand about support and resistance. Do you understand? It is very, very simple. If you look at your chart, I actually had to draw this out. This might not be the only market structure you see. There are different market structure you see, but all are formed with support and resistance. You just need to understand what I've just stated out. Breakdown, breakout, support and resistance flip. The more a resistance and support is tested, the weaker it becomes, and all of that. Then understanding your trend, the trend the asset is taking at that moment. If it's an uptrend, a downtrend, a ranging or a chopping market, and it's not advisable to trade a ranging market except you're a professional trader. So with this now, you understand the concept of support and resistance. And another thing you need to look at is for drawing trend line. And it is good you view your chart on a larger screen, or you try to compress it so that you can view a chart. Because if you are looking at this point, if you are looking at this point, if there was a breakout at this point, sorry, breakdown at this point, you wouldn't know. So you wouldn't know that financial institution, sorry, will actually push the price down to either this resistance level. So this resistance will act as is a new support, which is a resistance flip, or a further breakdown will happen to reach this support level before there will be a change in direction. And this change in direction will come and hit this support level, and this support level will now act as the new resistance pushing the price further down, probably to this resistance. You get? It will push the price back to this resistance before the price will go up. So this is why drawing your trend lines are very very necessary. So maybe I came into the market and I met the market at this point. I might just view my chart on a more concise screen, and I'll put my trend line here to this point and also draw this one. So I might expect the price to break out of this resistance level and what take a resistance at this point, at this support level, and I'll see a retracement back to this resistance level. So this resistance level now act as support. So with this now, you've understood how financial institutions trade the market and how to draw your trend lines and understanding the concept of support and resistance flip. So one last thing I want us to talk about before I close this class is the concept of demand and supply zone. I stated that from the beginning, that every support level is a demand zone and every resistance level is a supply zone. So for you to understand this better, you need to understand your candlesticks, and the psychology between the formation of your candlesticks, which is very very necessary. But what I want to assure you of is, if you look at the chart pattern of Bitcoin, probably at almost every support or demand level, you actually see the formation of this candlestick called a hammer. Do you understand? Sometimes it will be the bullish engulfing. Do you understand? Bullish engulfing in the sense that here will be your smaller red candle, and here will be your bigger green candle. So in the demand zone, this is what you mostly see in this. Let's say for instance, if you see this in this our demand zone, this support level, so we'll be expecting the price to bounce off, or here, or let me say we spotted out this chart pattern. Maybe our candle for that day the close was higher than that of the previous candle. So, and we saw this and the formation of the new candle, stuff like that. So and this candle was formed, we will see that is actually a demand zone. So prices will go up, and if you see this in a resistance level, that is actually a supply zone. So we're expecting the price to go down. I'm just giving you an idea of the demand and the supply zone. But to understand it better, you need to understand the candlestick, the concept of the candlesticks, and the psychology between their formation. Then with that, you can trade your support and your resistance even without even using indicators. All you need is to add the volume. So I hope you understood something out of what I've just taught. So what would you do? Just, if you have any question, drop in the comment section, like the video, and share with your friends. Thank you.